Welcome to Subramani. One question which people have been asking me is it safe to invest in multi-asset funds? Uh, how much risk is there? And what are the return expectations going forward? So first of all, understand that multi-asset means it has to invest at least 10% in three, four sectors. I mean, three, four, like equity, maybe foreign equity, maybe debt, maybe gold, maybe oil, whatever are the assets in which they are going to invest. They will have to stay somewhere around 10% at least. So what are the risks in the multi-asset fund versus a say a pure equity fund? So the risk which is there in both the fund houses is we are not at a very mouth-watering levels of equity valuations. Equity valuations in India are high. It may go higher. I'm not saying no, but it is definitely not at some mouth-watering levels. Indian stock markets, especially mid and small cap, trade at a elevated PE after 2023-24 bull run, right? So right now market PE is not really low, it is high. So if you have 70% of your portfolio into Indian equity and foreign equity, and say you have Japan is also at a high, US a few stocks, 7 8 stocks may be at super high, but the overall market is not cheap. So wherever you have invested, you have to understand that equity market is today at a elevated level, and that if 50% 60% of your money is in equities, chances are if you got 23% last year in your multi-asset fund, I got it. That's why I'm making this video more for myself. Any expectation in that range is completely wrong. It cannot happen, right? If it happens, it is just providence, sheer luck. But your expectation should be more like 9-10% kind of a return, which itself is fantastic, considering that equity may remain flat. The appreciation in debt portion is almost over. Interest rates are not going to go, interest rates will go lower, but it may go lower at a later stage. So the portfolio appreciation part of debt is over. So it will have to be yield cannot be too high in the market. In this market, maybe 6-7% yield is what is the best that you're going to get, even in corporate debt. Gold has given 50% return in 2025. So in 2026, gold might do nothing, or it might actually go down, right? So with this as the starting point, you also have to remember that I think Nifty has given a negative return for the year, for the for August September. If you take from August 24 to August 25, or August 20 September 25 to October 25, you might see a negative return even on the Nifty. So on an SIP basis, you may not have lost money, but just on a point to point basis, yes, you could have lost money in equity, so you get a negative return. So there may be some recovery, but may or may not happen. Market volatility will continue to be there. Geopolitical tension will be there. A war here, war there, a bombing here. Plus you have these Islamic terrorist bombing all over the world. So all this could lead to more uncertainty in the market, more geopolitical risk. Of course, it might also mean that India might do very well on the defense exports. So the positive side is also there, but geopolitical risks are currently too high. Another thing is gold and silver have rallied very well from 2023, 24 and 25. 25, of course, being a super boost, which means next 1 year it may do nothing. It may give you negative returns. It may actually fall, right? All these things are possible. So many funds which will have 10 to 15% in gold ETFs or physical gold or whatever they are buying, that portion may not be able to give a great return. Interest rate debt risk is over. So if interest rates go up, you might see a depreciation. If interest rates go down, you will see some appreciation, but I think most of that is already there in the price. So then lower upside in equity bull run, because equity bull run has already happened. Some people may be able to happily take the money out and buy real estate or things like that. It's happening. You see this happening. So If that also happens, there'll be more selling in equity. So if equity does not give you any return, debt gives you 6-7%, gold gives you zero return, take the weighted average of all this, what can you expect? You cannot expect anything more than 6-7%. I am optimistically expecting around 7-8%, maybe 9%, but anything beyond 9% is a complete bonus. Can you still make this your prime core of your portfolio? Answer is yes. It definitely reduces risk. Multi-asset, I had always said, is a very good way to reduce your risk, not to increase your risk. But if it puts too much money into, say, gold, and gold does nothing, right? So they can go from 10 to 20%. So if they are at 19% in gold, thinking gold will go up, that's not going to give a great return. So I don't think you should expect anything more than 9%, 10% in multi-asset funds. But continuing to do an SIP makes sense. After you retire, you could do a systematic withdrawal also from here. But doing an SIP, yes, it makes sense. But keep a leash on the horse that you're riding, called market expectation. Don't expect to a higher return. But I would say that even for equity funds. Thank you.